Hi there, Patrick Francey here, host of my podcast, The Everyday Millionaire, inviting you to join me as I have an absolutely fascinating conversation with my guest today, Patrick Yip. Now, Patrick serves as the Director of Business Development with APMEX and another company called OneGold. And over its more than 20-year history, APMEX has become one of the largest retailers of physical gold, silver, platinum, and palladium, and has sold over $15 billion with a B in product. OneGold, on the other hand, is a fast-growing online precious metals platform that has processed over $750 million in transactions during its first 3 years in business. Patrick has been a member of the APMEX team since 2011, and he's held roles in sales and project management and business development, and he's also played a key role in the company's 250% growth on marketplaces such as eBay, Amazon, and Walmart. Now, in this conversation, he and I cover and we unpack many insights to what is becoming many everyday millionaires' favorite topic, and that is precious metals. Listen in, enjoy. Patrick Yip, welcome to the Everyday Millionaire podcast. Thanks for joining me today. I'm excited to have this conversation.
Hey, thanks for having me on, Patrick.
Now, let's talk about, as I always do with my guests, if somebody walks up to you who's never met you before and says, "So Patrick, what do you do?" What's your answer to that question these days?
Yeah, so I guess if someone asked that related to my career, I would say I'm the Director of Business Development at APMEX and OneGold. For people who don't know who APMEX is, we are one of the largest online precious metals retailers in the U.S. We've been in business for about 20 years and have done over $15 billion in lifetime sales. I have personally been with the company for over 11 years now. I've had roles in merchandising, sales, project management, marketplaces, and now business development. Right now, I'm currently running a platform called OneGold, which is an APMEX subsidiary. What OneGold is, it's an online investment platform that allows you to take a vaulted position of gold, silver, and platinum. And OneGold has done over $750 million in transactions over its first 3 years in business. So basically a newer company and very successful. I was also involved in launching the first ever precious metals rewards credit card, and it's actually called the Bullion Card.
Well, you know, something I recall the Bullion Card, that was from a long time ago. That was several years ago, was it not?
We were talking about it for a while. It's actually been about a 2 or 3 year process. Okay. We've talked to different banks, different payment processors, talked to Visa, talked to MasterCard. Yep. Unfortunately, the credit card industry is a highly regulated industry, and precious metals are kind of a little bit on the fringe for a lot of investors. So it required a lot of jumping through hoops to get this thing live.
Well, let's talk about precious metals. I mean, that's it's a topic that I'm very, very interested in. I have invested in precious metals for a number of years, and certainly given what's going on in this new global climate that we find ourselves in, the conversation around precious metals, particularly silver and gold, seems to be really gaining velocity. And, let's kind of consider that. First off, something that you said I want to go back to, which is in that APMEX, that app that you were talking about, is that actually physical gold that you're storing on somebody's behalf. So in other words, they may not have it in their hand, but it is actually physical gold or silver allocated to them.
Yeah, so there's a couple companies we have. We have APMEX as the parent company. We have OneGold, which is a subsidiary online investment platform. We have another company called Citadel, which is where we store metal. And then we have our own private mint called Nine Fine Mint. But the biggest company is APMEX. That's the parent company. And I almost consider this like the Amazon of precious metals. We have 25,000 products in stock available to ship. All of the inventory is right here in our vaults in downtown Oklahoma City, ready to ship. We're not going to sell you a paper promise or anything like this, but you could add things to your cart, whether it's a Gold Eagle, Gold Maple Leaf, Silver Eagle, whatever you want to put, you add it to your cart, you check out, you can pay by various payment methods, just like any other online e-commerce site. And then we'll ship that metal to you for physical delivery. So a lot of our customers do that too. A lot of people like precious metals because they're tangible, they're off the grid, they want to take possession of it. But that's high level, the parent company. That's where the majority of our sales go through.
Now, is that also the opportunity to store it on site in your facility where it is allocated? What I guess I'm trying to get to is that, there is a strong argument, I guess, or discussion. I don't know if it's an argument, but it's a strategy where you would hold gold or silver, a precious metal, in any number of countries that you don't have it physically on your own site. You may have some stored in Oklahoma, or you may have some stored at another facility. But the point is that the actual hard asset is the physical metals are being held in your name.
Yeah, so that would be a great solution for One Gold. So what One Gold is, it's an online investment platform. And to give you a little bit of background, so back in 2018, we actually partnered with Sprott Asset Management. They're a large alternative asset manager out of Canada. I believe you're up there too. A lot of people in the resource space have heard of Sprott Asset Management.
Sure.
But basically, we partnered with them to create a modern way to own precious metals. So instead of taking possession of physical gold, which a lot of people in these age, they said, I like doing everything online. What do I do with gold coins in my house? Like, do I hide it? Do I put it in the safety deposit box? So we wanted to create a modern way to buy precious metals. And a lot of people call it like a Robinhood or Coinbase of precious metals because it's so intuitive and easy to use. Mm-hmm. What One Gold is, as I mentioned, it allows users to buy a vaulted position of gold, silver, and platinum, and you get to choose where you want to store it. So if you want to store it in the US is one option. You could store it at the Royal Canadian Mint in Canada. You could store it in the UK, or you could store it in Switzerland too. And what One Gold does to get started is we first have arrangements with various vaulting companies, so Brinks or Loomis or the Royal Canadian Mint in Canada. We then source large 400-ounce gold bars or 1,000-ounce silver bars. So these are basically the bars you see in movie scenes where like someone breaks into a vault. Sure. And you see all those gold bars and silver bars. Like obviously the movie's probably not using real bars, but that's what it essentially looks like. We're storing these bars in a Brinks or Loomis or Royal Canadian Mint bar, or Royal Canadian Mint vault. We then make the metal available for sale. So when you buy it, you actually have direct ownership, direct title to the metal. It doesn't appear up on our balance sheet either. So it's 100% yours. If One Gold goes bankrupt, you have that metal. We actually will not sell metal that we don't own. So let's say you were a big whale and you said, hey, I want to buy $10-20 million of gold. And we've had orders that large too. We might say, hold on, we need to source more metal before we could sell it to you. So we're not going to sell an unbacked promise and then say, okay, now we got to source the metal. We need to make sure that the metal is there one for one. It's fully insured by like Lloyd's of London, or in the case of Canada, the Royal Canadian Mint. It's audited by a top 5 accounting firm. So it's all, everything is all in the up and up. As I mentioned, founded by APMEX and Sprott. You could fund it in a variety of different ways. So you could do a bank wire, bank ACH, or I think it's called the EFT over there in Canada. Mm-hmm. You could pay by credit card, checks, cryptos. And let's say, for example, you said, hey, this is great. And one day you said, well, things are getting a little shaky. I want my metal in my hand. We actually have a redemption option where you could swap this position in One Gold for any of the 25,000 products available on APMEX.
So tell me a little bit about, just for listeners/viewers who are not really up to speed, have talked about or heard about precious metals, why we would want it, but give me the fundamental difference between, the physical side of it and then, let's say, doing paper trading on, I think it's the COMEX. Give us that distinction or that differentiation so that people can understand it.
Yeah. So the nice part about owning it physical, like on One Gold or APMEX, is a lot of times people own it outright. It's not leveraged. It's off the grid. It doesn't matter what happens with the metal price. You can pass it on to your kids. You do whatever. If you're trading, a lot of times, if you're trading, let's say in the COMEX, these are largely futures contracts. So they're leveraged. You're putting a couple $1,000s in an account, and then you have access to 100,000 or 100 ounces of gold. So what that means is if the gold price goes up, hey, you made a lot of money. You're basically amplifying your gain. But if the gold price goes down, you could wipe out your account. And unfortunately, I've done that in the past where I've wiped out trading accounts, but it was a lesson learned. But I would say that's the largest difference between someone trading on like the COMEX versus someone actually owning physical metal.
Yeah. So when we look at what the kind of the COMEX is to your point, is futures, and it's supposed to be backed by actual physical, but it's actually leveraged many more times over and over, is my understanding. Am I explaining that, or am I making a correct statement in that, Patrick?
Yes, a lot of times people use COMEX either for speculation. That's what a lot of traders do. Or if you're APMEX, for example, we actually do use futures contracts to hedge our inventory. So what we're doing is we're essentially just buying a product for a premium and selling it for a slightly higher premium. We're not speculating if gold's going to go from 16 to 17, 18 to 1800, or if it's going to go down. Because unfortunately, the people who don't hedge, they could get burned. If gold goes down from, let's say, 1600 to 1000, they could get wiped out if you don't hedge. But that's some of the reasons people use the COMEX. The majority of people who are trading on the COMEX don't actually take physical delivery, so they're using it for like APMEX to hedge, or let's say you're a speculator. There is a delivery option too, where you could take delivery of the metal. I personally have not had experience with that, nor have I really had anyone who's done it, but there is a process to do that. So supposedly the metal exists, but I don't know. I can't confirm.
Well, at the time of this, conversation that we're having today, there's a lot of conversations about silver currently being a lack of supply. And what's your kind of story behind that? That's what I'm hearing. I've noticed that my supplier of silver is, okay, well, we'll wait a few. There's going to be a lag time before you get it, and this is not available. We'll text you when it is available, or whatever the story is. So it seems that in the precious metal world, particularly silver, there seems to be some shortages, which was driven by, I don't know, increased demand. I'm assuming they're mining as much as they can. Any background in that at all, Patrick?
Yeah, that's a great question too. And I think it's important to talk about the retail sides first, like with coins and bars and so on like that, and then go on to the wholesale side.
Sure.
With 1,000-ounce silver bars, silver grain and all that. They're slightly different. On the retail side, let's talk about like Silver Eagles, for example. And the reason I mentioned Silver Eagles right now is if you ever try to buy one right now, you're going to pay basically about 100% premium over the metal content.
Wow.
Silver might be $18. You might be paying an $18 premium. And a lot of times it comes down to supply and demand too. So you look at APMEX, first of all, so we're an authorized purchaser from the US Mint. There's only a handful of companies worldwide that actually purchase directly from the US Mint. And the reason is the US Mint doesn't want to deal with retail investors like you and I. They want to deal with just a handful of parties. So on the supply side, we only have 4 more purchases from the US Mint for the remainder of this year. And then they're going to stop the productions of the 2022 coins. They're going to get the tooling ready. They're going to get ready for the 2023 coins. So there's a limited amount of coins that we could purchase. That's high level on the supply side. On the demand side, you're seeing record demands. We're seeing, just looking at it from 2019 before COVID to now, you're seeing new customers at 2 and 3x what we've seen in 2019. You're seeing sales more than double. So there's a lot of demand, not a lot of supply. And then even getting back to the supply point too, the US Mint can't get a lot of the silver blanks. So these are the round little discs that before the product becomes a coin, it's basically, it looks like a coin, but it has nothing stamped on it. So they can't get these blanks in the quantity and quality that they need. So getting back to premiums too, we typically in an ideal case would buy everything we can from the US Mint. Let's say they allocate X number of coins. We say, we'll buy X number of coins. And in an ideal world, we sell less than X number of coins. So we source everything through the US Mint. In a tighter market, we have to approach a lot of these authorized dealers and say, well, we need more coins. And they're obviously in the business to make money. So they're going to say, well, I'm not going to sell you at slightly over my US Mint price. I'm going to jack up the price way high. So then we buy it from there. And just as one data point too, is we actually bought another 100,000 ounces of Silver Eagles just last week, I think for about $15 over spot, which is significantly over what we've ever, basically, I believe it's the highest we've ever paid. And as a result, we're selling it for about $18 over spot. So people say that retailers like APMEX are gouging. I said, no, my cost went up, unfortunately, too. And we're just trying to make that small spread on it. But that's a little bit more on the retail side, if that makes sense.
Yeah, so let's talk a little bit about why precious metals. When we look at what's going on, in the world, why is the demand so high from your perspective? Now, I have my views of it, but you're the expert here. I'm going to pick your brain about what you see in behind the scenes, Patrick, as to why are people all of a sudden going and migrating more than ever, in this case to silver, but I think gold as well, maybe not to the same degree. But give me a little bit of background on why that is.
Yeah, so I think we need to talk about inflation first. You look at it, it doesn't. everywhere you look, you go to the grocery store, you turn on the news, you're seeing inflation as over 8%. I believe 8.2% is the latest number that they released last month, which is basically the highest level in 40 plus years. So people are running to precious metals because they've historically been a hedge against inflation. So I've looked at a lot of data too, just saying like, okay, what can we learn from history looking at inflation? So first of all, let's see what happens in prior inflationary cycles. So as I mentioned, inflation's at a 40 plus year high. So unfortunately, we have to go prior to 1980 or 1980, not 1880. That would be way back.
Way back.
But yeah, so you look at the 1960s and we had an inflationary period, and inflation hit about 12%, and it took the Fed 9 years to resolve that. So, long time. They couldn't figure it out. And, they resolved it for a little bit after in the late 1960s. And in the 1970s, we had another inflationary cycle. And that inflationary cycle took 5 years to resolve. So it looks like they're getting a little better. They went from 9 to 5, but inflation hit 14.8% back then. So the question is, okay, well, where are we in this current inflation cycle? Just last year in January 2021, inflation was only 1.4%. Now we're about 2 years into it. I personally don't think the Fed has any grasp of this anytime soon.
I'm on that page.
I mean, best case, maybe they figure it out in a half a year or the next year. But even at that, I don't think you're going back to 1% inflation. Maybe it gets sticky at 5 or 6% and it just stays there for a while. So with inflation here, a lot of times people are running to precious metals. And I said, well, let's also look at how different asset classes did during the inflationary cycles. So let's start by cash. Obviously, I don't recommend you hold a large position of cash right now, but maybe you do hold it just in case there are buying opportunities. But let's say it takes 5 years to resolve the inflation. 5 years of 8.2% inflation compounded is going to erode about 35% of your cash's purchasing power. Not a great outcome if you're holding cash. And let's say inflation lasts 9 years, like it did in the 1960s. It's going to erode north of 55% of your purchasing power. So also not good. Don't recommend you hold a lot of cash right now. Maybe, like I said, maybe you hold a little bit in case there are buying opportunities for different assets. I'm actually holding some cash right now because I think a lot of things are going to go down. But don't have 100% of your portfolio in cash. You might get burned in the long term doing that.
Well, I think that's all part of, even having a plan. And, you and I talked like for 2 minutes, before we got fired up here, which is to say that, we're not implying or even suggesting that anybody should go all in any asset, including precious metals. And you have to actually have a plan to say, is precious metals even make sense for me? And if it does, what percentage of an overall portfolio do I want to add to, so
sure.
And there's all sorts of suggestions. It really depends on what your goals are, where you are in your life, what the outcomes are what your intended outcome is in terms of even buying precious metals. Why are you doing it? I'm assuming that from my perspective, back to your point, we talk about inflation, and are most people buying it as a hedge on inflation? There's lots of talk about, the possibilities of, even US at some point, not tomorrow, but at some point, even losing a reserve currency status. We're seeing the central banks around the world load up on gold, have really upped that game over the past few years. So there seems to be something percolating under the surface if you're paying attention to it. How do you, at least from what I've read and listened to, do you see it that way, or how do you see it? I look at gold. Let me just rant for one more second. Not rant, but
sure.
Go on about it. I mean, we talk about gold, and even in 2008, I think it was 2008, we saw a price drop in gold, which was surprising, and then it lifted off. It took off. In the past couple of years, I think it was 2020 or sometime in 2021, gold peaked at about 2,000. Then it comes back down to 1,650. So having said that, the stock market dropped, 30 to 50%. I mean, depending on what stocks you own. And of course, Bitcoin, went from 65 to 20, and, a lot of assets really dropped. So although gold didn't gain, which was kind of what everybody was anticipating, it didn't lose as much. It's still your best bet on the block. But that's my kind of takeaway on the overview. What's yours, Patrick?
Yeah, you said a lot over there. I'm just going to try to comment on a lot of it. I look at that, and you mentioned the dollar, the world reserve currency too. I think over time, and it's just depends on how long. It's like it's inevitable that the dollar will lose its world reserve currency status, and inevitable it will go to zero, just like any other fiat currency. The question is that imminent? It could happen tomorrow. It could happen, in our grandkids' lifetimes. I don't know, right? I mean, it will happen eventually, just like every other fiat currency eventually goes to zero. It's just you can't have a currency that's not backed by anything, and you can't have crazy government policies where they're just printing this thing to basically no end.
Well, and I think on top of that, it's not just the U.S. It's every central bank in the world, basically, or at least 98% of them. I mean, I think we have to kind of really shine a light on that part of it as well, as how much currency is flooding this market.
Yeah, and that's an interesting thing too, because you even look at the dollar, and you look at the dollar represented by the dollar index, and it's rallying compared to all other currencies. And it doesn't mean it's going up; it's just going down less than some of the other currencies too. They're all in a race to the bottom. It's just how quickly can they all get there? But I think you look at that too. You look at what you believe is the likelihood of the dollar going away, or the dollar losing a significant amount of its purchasing power, and you make the counterpoint of how much gold do you want to own. If you think the dollar is going to last around forever, maybe you don't own gold. Mm-hmm. If you say, hey, this dollar is going to crash, and the crazy government policies, like you said, across the world are not supportive of fiat currencies, maybe you're a little heavier in gold. It really depends on your outlook.
Well, we have to develop a thesis at some point, and that's not easy to do because there's such a mix of information and views and all the rest of it. When you look at gold, it's really there's no industrial application for it that I can think of. There may be, but basically it's money, jewelry, that kind of thing, whereas silver has an industrial application. So when you look at silver and gold, and if somebody is saying, well, maybe I should put a little bit of precious metal in my portfolio, what's your thoughts on why would they choose one or over the other, or do they balance it? Yeah, what's your experience in that, Patrick?
Yeah, so I almost look at gold as like your large cap stock. It's your more stable precious metals investment, and it is more volatile than any large cap stock. Let me make that clear too.
Sure,
it's still a pretty volatile asset. And silver, I look at as almost like your small cap stock. So let's say the precious metals markets go up. Gold goes up 1%, silver may go up 2%. It's just that large cap versus small cap relationship. Similarly, if gold went down 1%, silver might be down 2%. So a lot of times people look at it, if they're bullish on gold, if they said, I want a little bit more upside, maybe I get involved in silver. There's actually an interesting thing that I looked at too, because I like using data. I'm a data junkie. And I said, well, what is the best allocation of gold using history? And I could get into that too, if you care to hear it. So we looked at it, and a lot of times if you ask a financial planner to say, okay, well, what should I get involved in? Typically the financial planner is going to say, hey, you should probably get involved in some stocks and some bonds. And he or she may recommend an allocation of 60% stocks, 40% bonds. I mean, everyone has heard something similar to that. So I looked at the last 50 years. So from 1970 up until now, a little over 50 years now. And then looking at the 10-year average return. So I don't want to penalize stocks in 2008, nor do I want to reward gold in 2011 or something. I want to say, okay, what if your holding period is 10 years or more? You want to basically normalize some of these short-term spikes and so on like that. Your stock portfolio, 100% stock portfolio on a real return basis is going to return about 7%. And then it has a standard deviation of about 5%. So your standard deviation is basically your volatility, or how well you could sleep at night. That's what I like to say too. Is like, you don't want something that's going to go up 50% and down 50%. You're going to drive yourself crazy. Your bond portfolio, 100% in bonds, is going to return a 5% real return and a 3% standard deviation. So 2% lower return, 2% lower standard deviation. If you did an 80% S&P portfolio and a 20% gold portfolio, so you basically swapped out your bonds with gold, that return is now 6.7% of real return. So 30 basis points or 0.3% lower than your stock portfolio, 100% stock portfolio, but a standard deviation of 2.7%, so lower than your bond portfolio. That's what history says. The big question is, will history repeat? Time will tell, but that's what the data says.
Well, I love data myself, because what I've learned this many years into it is that I've made some really bad mistakes because of emotional decisions. And so I try and just get regrounded in the data. And that helps a lot, but it's hard not to get caught in the emotionality of what's happening, today, given what the pandemic drove, or the decisions. I don't want to blame it on the pandemic or on COVID. I look at it and go, it's more the decisions that were made in how to handle all of it that really caused the problem, not the problem itself. So that's an aside. When we look at gold and silver, and one of the things that I've heard, and which is kind of different. I'm a bit of a fan of Jim Rickards, for example. He's one of the guys that I follow, and he gave some really sage advice, I think. And he said, it used to be that you would hold a diversified portfolio, and that diversified portfolio would represent 20, 30, 40, whatever stocks, and they would be different industries, if you will, and you would look at different risks and blue chip versus, not blue chip, that kind of thing. He goes, he says, that isn't the case today. He says, a diversified portfolio is going to look like probably some stocks, definitely some precious metals, maybe even some Bitcoin, although he's not a big believer in Bitcoin, but the diversification to really hedge against what's happening is the diversification in where you're going to place your assets or place your capital, what assets you're going to own. In what I've learned over the years that has helped me shift a little bit how I look at precious metals is I don't look at it as an investment. I look at it as insurance. And that's kind of my view of it. I don't look at it as, okay, I'm going to ride this thing to a high. I'm looking at it as we deal with inflation or a devaluation of whatever fiat currency you're dealing with, gold particularly, but gold and silver are a hedge against that. Is that how you look at it, or do you actually hold it as an investment, Patrick?
No, I look at it as money. So obviously you have different currencies. You have the Canadian dollar, US dollar, euro. I almost say that gold and silver are money that cannot be manipulated easily by a central bank. So you look at the crazy government policies, as we mentioned, just giving out money left and right, stimulus checks, student loan forgiveness, just like endless amounts of money. Unfortunately, with gold or silver, I guess unfortunately for them, and I guess it's a good thing for retail investors, is you can't just print gold out of thin air. You can't just say, okay, I'm going to click a couple buttons and here you go, a ton of gold just appeared. It's not possible. It requires a lot of labor, a lot of resources to pull it out of the ground. So I almost look at it too, like I said, as money. I would definitely not recommend that you put like 100% in, as we mentioned. There's certain assets you should hold. If you're looking for cash flow, maybe it's rental real estate.
Yep.
If you want to, something like a stable value, gold is good. But I don't expect gold to. I don't look at it as an investment. I'm not one of these people who are saying, hey, $20,000 gold and $1,000 silver. Maybe it does happen. I think over time, eventually, maybe if the dollar keeps on going down, it does happen. But I'm not hoping for that in the next several years.
Well, I think it's interesting, right? Is that, back to, the purpose, it's money, right? And perhaps people can give a context in that if you're going to have dollars, fiat currency in the bank, what is being eaten away on a regular basis. And when you have precious metals, consider that rather than having a savings account in the bank, you may take a portion of that savings and actually hold that savings in precious metals. That's kind of how I look at it, which is that's the hedge.
Yeah, exactly.
So tell me a little bit about, AppMex. How did you get involved in it? What was your journey to this and precious metals? Did you grow up thinking precious metals? Was your dad a gold bug? How did you find yourself where you are today?
Yeah, that's an interesting question. So it all started back in 2008. So back then I was just working a normal job. I had your typical portfolio of stocks and bonds. Didn't see the financial crisis hitting, just like many people didn't see it. So I was just riding the wave, and sure enough, the financial crisis hit, and my 401k got chopped in half. And now I look back, it's actually something good because it's taught me a lot. It's actually been kind of a pivot on my life. But back then it was pretty painful to see your assets get chopped in half. Now I kind of joke that the 401k became the 201k, but
That's good. That's good. I've not heard that, believe it or not. That's good.
But so anyway, like I went to my financial advisor and said, what happened? Like surely someone saw that. And people did see it. It's just the mainstream investment community didn't see it. And, I recall him saying, hey, no one could have predicted that crash, or that crash was kind of a black swan event. And so, it got me looking into a lot of different investments, got me looking into Austrian economics and the free markets. And then, as you mentioned, in 2008, gold actually corrected with the stock market. But for the year, it was actually positive, unlike stocks, which were down 40, 50%. So got me into precious metals. In the years after 2008, I started becoming more and more interested in precious metals. I was actually working for myself in 2011, doing brokering commercial aircraft deals too. But, so I was making some money, but the money wasn't stable. And I was just had some dead time. So I went on atmex.com. I was actually a retail customer buying precious metals because I said, hey, this is probably a good long-term investment. I clicked the career section and said, hey, why not? I just applied and sure enough got interviewed. And I was dating my now wife, but my girlfriend at that time. I was like, hey, what do you think of Oklahoma City? And we were in LA. She was born and raised in LA. So she's like, what's in Oklahoma City? Thinking that we're going to drive around tractors and live in a farm, but we moved out in 2011 and love it ever since.
Well, I mean, you got to look at what's going on in California today and be really happy you're still not in California.
Yeah, it's actually it's funny too because I mean I still have a lot of family in California too, and I'm just seeing a lot of things. It's going definitely the wrong way. And I like watches too. I like wristwatches. I like luxury watches. And sometimes I watch some of these different watch communities, YouTube videos, and it seems like LA is like a hotbed for watch robbery. And like, I mean, I lived in Studio City, just north of the Hollywood Hills. So Beverly Hills wasn't that far from me, just on the other side of the hills. But Beverly Hills was always a bubble. Like you were safe. Like you could leave your car unlocked. I mean, you could wear a six-figure watch. You could have diamonds all over you. No one ever did anything to you. But now you're hearing it, and there's a lot of people getting robbed. A lot of gunpoint robberies. I've heard that someone drew a gun in a Beverly Hills restaurant. I heard another time someone pulled a gun and someone taking pictures of their McLaren. Just crazy. Like just not what I remembered of California before I moved out.
Well, it's because of this change of events, actually, that everybody, has to look at, I should say everybody, it's important to look at the world through a different set of filters because things are definitely changing. When we look at and talk about precious metals, of course, I'm a real estate investor, and, the community that I speak to is also real estate investors primarily. But having said that, a lot of the sophisticated real estate investors are also savvy in terms of their own diversification and where they park capital. And I know precious metals is an area of interest to many. When I say that, you're in it, I'm in it. It's like everybody's investing in gold and silver, but the reality of it is I think the stat was like 1% of the population of investors, or less than 1%, actually invest in precious metals, and you never hear about it, or rarely hear about it, on mainstream media. Any thoughts or kind of philosophy explanation for that, Patrick?
Yeah, I think you bring up a couple points there in terms of the general public investing in precious metals. So as I mentioned, APMEX is one of the largest online retailers in the U.S. And then I think the U.S. has, I don't know what the current population is, almost 400 million, let's say, somewhere around there. I don't know the latest stats, but we have about 2 million email addresses in our database. And not all these 2 million customers have purchased. Some people just put their name down. Now they get emails from us, but they've never purchased. But it just shows you too that, like, let's be conservative. Let's say all 2 million of these customers purchase. And this is 2 million across, everywhere. We have 2 million in the US, Canada, like this is customers all over the world. It just gives you an idea of the percentage of the population that is even remotely interested in precious metals, which I would say is definitely very, very small. I think I've heard certain stats too. You look back at the 1980s, or for example, when gold hit $850, I believe that the stats were something around like 2% of the public was in precious metals, but clearly we're nowhere near there.
Well, it's something, that I think given the shortage right now, or the increase in demand already at the retail level, I don't know what it is in terms of industrial application, if the demand has increased. I'm assuming yes, but has it?
Yeah, I think that you bring up a good point too on the wholesale side too. So I could get a little bit into like the 1,000-ounce silver bars and the silver grain too. So we source 1,000-ounce silver bars for our One Gold platform. As I mentioned, this is where we get the big bars. We throw it in a vault and so on like that. So far, right now, what I can tell you is premiums have gone up and supply is getting tighter, with lead times longer. And what I mean by premiums is, so you have the raw commodity prices, so the silver price, and we have to pay a small markup over that to get it delivered in the form we need it to be. It's just like you could look at let's say coffee, for example. I don't know what coffee's trading for, but let's say $2 a pound. Well, you can't go to Starbucks and get coffee at $2 a pound. It's just not possible. You have all those the whole supply chain. It needs to be, put into bags, made, and all that stuff. And by the time you're buying a cup of coffee from Starbucks, it's way over that. So when I'm talking about a premium on silver, this is a small markup over the commodity value. So back in 2019, we were able to get 1,000-ounce silver bars for about 3 cents over the silver price. And now it's about 34 cents over the silver price. So a 10x higher premium over there. Like I mentioned, there's more delays now. But on the One Gold side, we're able to source basically what we need on the 1,000-ounce silver bars. But if I shift to silver grain, so this is the little pellets of silver too, that is made into different products. And we have a subsidiary called Nine Fine Mint where we make a lot of products too. So we make silver bars, we make silver rounds, and so on like that. Right now, I could tell you that the silver grain is extremely tight. We actually had to reach out to all our different partners where we source silver grain. And for the most part, we're getting what we need, but we're still a little short. And what Nine Fine Mint does is it mints about 200,000, or not 20, 200,000 ounces of silver every week is what we're running at for the last couple of weeks. So just gives you an idea, but we can't currently meet our needs with silver grain. So it is very tight on the wholesale side.
Now, when you buy 1,000-ounce bar, you're not able to do anything else with it. You're not in any other, you're literally the middle for wholesaling or retailing that silver. Is that correct? You're not taking a 1,000-ounce bar, cutting it into smaller pieces in order to retail it. Is that correct?
Yeah, so there's 2 parts. So like with One Gold, what we're doing is we're just buying that 1,000-ounce silver bar and throwing it in a Brinks or Loomis vault, and then we make it available for sale. And then the customers own either a part or a whole bar or whatever, depending on their allocation. That's what One Gold is. On Apex is a little different because we do retail out our products. So on one side, we could sell a 1,000-ounce silver bar. I probably would not recommend anyone buy one because it's hard to authenticate, especially when you lose that chain of custody and that supply chain. As soon as it goes out of our facility, we don't know who's tampered with it, if it's authentic or something like that. But in some cases, we do make the 1,000-ounce silver bars, like through Nine Fine Mint, into smaller retail products, like 1-ounce rounds, 10-ounce bars, and so on like that.
So tell me something, though, is that when we look at what's happening with silver today, spot isn't really changing. Spot price has been pretty much, 18, 19, drop to 17, whatever the numbers are. It's really the premiums. So I'm trying to understand the spread of premiums when spot really hasn't changed. Can you give us some insights into that, Patrick?
Yeah, I would say a lot of times on the retail side, the premiums are driven by a lot of supply chain issues too. So, for example, looking at the U.S. Silver Eagle, like I mentioned, is trading for about double its silver content, $18 premium, $18 spot. The U.S. Mint cannot currently get enough blanks to make these coins. And just to take a step back, let's talk about like a little bit of the supply chain. So first you have a mining company. They pull the silver out of the ground. They then make it into like what they call like doré bars. So maybe it's 80% pure silver. And then they ship this bar off to like a refinery. The refinery then takes this bar and then it refines it. So they obviously no one wants an 80% silver bar, 80% silver. That's not what you want to own. So they refine it to like 99.9% pure or 99.99% pure. They now have large bars, and then from there it gets shipped to like another company that basically manufactures the blank. So these large bars are then pressed and put into large sheets. So little flat sheets that basically are the same diameter or same thickness of what a coin or round should be. And then from there, they have machines that stamp it out and they make little circular silver discs, which are called blanks. And then after that, the blanks are then, let's say the blanks from the minting company is sent to the US Mint. They make coins, and then the coins are then sent to a retailer like APMEX. But where the supply chain is currently stressed right now is in that blanking process. As you can imagine, there's a lot of controls. There's a lot of like you can't just have a 1,000-ounce silver bar. You have to make sure that the metal is the right thickness, it's the right size, it's 1 ounce, so that when you order a 1-ounce silver coin, it weighs 1 ounce and doesn't weigh 0.99 ounces. And someone's like, yeah, close enough.
Somebody's having a bad day on the line. That's good. Let it go. Yeah.
So there's that process that takes a lot of time, takes a lot of resources, and that's where the supply chain is is basically stressed. So if you look on one extreme end, you have that silver eagle for $18 over spot. And then on the other end, you have that 1,000 ounce silver bar, which is trading at, let's say, 34 cents over spot. So right now, I could tell you there is no silver shortage. I know some people like to say that, but it is available at least for what our needs are. And I can say we're not a small player, but we're not like a massive player. We're a reasonable sized player. We're on track to hit over 2 billion in sales this year for precious metals. So it gives you an idea to say like, okay, well, it's meeting our needs. I can say that there was one time, and I believe it was 2021, I believe all these years blend in together, where we had a silver squeeze. And for the people who don't know what the silver squeeze was it was a lot of these people who got into like Wall Street bets, and they wanted to squeeze AMC to see how it, like there was a large short position with a lot. I don't know who was holding the short position, but the thought was a lot of people would buy AMC. And it would force the people who are short or basically betting for the price to go down to cover, and they basically need to buy back their shares, and it's going to cause the price to spike up. So that's what happened in AMC. But there's a large short position in silver, and the thought was people are like, I want to squeeze the silver market. So what they did back in that 2021 time was they wanted to buy as much silver as they could from like different dealers like APMEX, buy it off the exchange, just in whatever way they could do to take silver off the market. And during that time, what was interesting too is when we went to our wholesale contacts trying to buy 1,000-ounce silver bars for one gold and trying to buy silver grain, we were informed that there is none available at that point. So just a little interesting thing. I could say right now the supply chain works, but back then something broke. I don't unfortunately have a ton of insight on there, but I can just tell you from back then for our needs, something broke.
So, okay, but let's talk a little bit about this, because when we consider that, you're saying that from your perspective, there's not really a silver shortage. You get what you need, but do you get what you need for the retail investor? We talk about Eagles, or I don't know what the availability of Buffalo or whatever it might be, the different retail type buyers seem to be bumping up against. I know even here, if we go to the Canadian Mint, there's shortages. There's a whole bunch of things that they don't have available. They don't even tell you when they might be available. On your side of the equation, however, you're more looking at it from a wholesale perspective. Am I reading this correctly?
Yeah, so every part of the business has different needs. Like I said, One Gold and Nine Fine pull directly from the wholesale market. So they want bulk silver, 1,000-ounce silver bars, silver grain, stuff like that. And then on the APMEX side, we're looking at the retail market. So we're buying the silver Canadian Maple Leafs, the silver Eagles, minting the Buffalo Rounds, the silver bars, and so on like that. So they have a slightly different market dynamic. But I mean, I could tell you that inventory is getting tighter on both sides. But right now it seems to be working reasonably well for us.
So tell me a little bit about maples, because, being in Canada here now, one of, the Canadian maple, of course, also had the queen on one side of it. What does that mean now that the queen's moved on? Soon we're going to have a king. Does that change the value of anybody that's holding those particular types of coins? Or was there so many in the market it doesn't really shift, or doesn't matter that she'll no longer be on the coin?
Yeah, I think this is a good time to bring up a little bit about the different products.
Yeah.
So there's what we call a bullion product. So this is like a product that's going to trade for slightly over the market value. So basically, it's going to follow the price of gold and follow the price of silver. And when I say slightly over, that's your premium that's involved in making, minting, manufacturing, shipping, and all that coin. Like it's not possible to buy a large quantity of Canadian Maple Leafs at spot, because the Royal Canadian Mint doesn't even charge us spot. We buy directly from them. They have to put in their processes, their labors, and so on like that to make this coin, and they charge us a markup. But with a Canadian Maple Leaf, a lot of those are what we call like bullion coins. So they trade for close to the commodity price. And when they remove the queen, they put the king on there, and the future coins, I don't know exactly when that's going to happen. I would assume maybe I don't know how long it takes for them to get the tooling done. Neither, yeah. Maybe it's next year, maybe it's the following year. I'm not an expert. I can't say that I've never worked
maybe it depends on what agreement they have with the palace, so we'll see.
Yeah, there you go. But they've made a lot of these coins too. Sure. Like on the maples, they could make a couple 100,000 gold maples a year. On the silver side, they're making tens of millions of these a year. So if there's a queen, if there's a king on it,
doesn't matter.
Probably doesn't matter. But we also have semi-numismatic coins, which is what we call like basically, and numismatic is a fancy Greek term. It just basically means like the study of coins. But semi-numismatic we call as like they generally trade with the price of gold and silver, but they do have a little bit of collector value.
Mm-hmm.
So in the U.S. we have $20 St. Gaudens, $20 Liberties. These are the coins that the U.S. had before 1933. So these were the currency in circulation then. Obviously, those coins are over 100 years old now. So they do have a little bit of a premium too, because they don't make them anymore. Unlike the Canadian Maple Leafs, where guess what? Next year, they're going to make more. There's no shortage of these things. And then on the far end too, is you have what we call like pure numismatics. And that's where you have a complete collector coin. So this is like almost like rare art, like a Picasso or something like that. Like you're buying this not because it's made out of gold or made out of silver. You're buying it because there's only 10 of these in existence. And some of these coins, some of these rare coins could trade for millions.
Well, I guess then at that point, though, before somebody starts buying that type of coin, you really have to kind of study and understand what the collectabilities of something are. To your point, a Canadian maple, they make millions of them. It really is at that point just money. It's just, that's it. There's nothing there. When you're looking in, you're kind of, I know you don't advise or give advice. That's not the point of all of this. But when you're speaking to a group like this, are you suggesting that people look at specific coins in terms of the collectability of them? Do you suggest that might be something to consider if there is a shortage in in an eagle or a buffalo or a Canadian maple, that maybe it doesn't hurt to go and pay a bit of more of a premium for some type of a collectible? And then, of course, always assuming that you're dealing with an absolutely legitimate dealer. That's, I think that has to be one of the key assumptions there, is that if you're not dealing with a legitimate dealer, if you're doing personal kind of stuff, you got to be really careful, I guess, and know what you're doing.
Yeah, for any new investor, I would first recommend that you just stick with bullion. Don't get into a lot of the collector stuff too. I mean, there's people who make a living off this collector stuff, and there's people who get burned on this collector stuff. So I'd hate to have anyone who says, okay, I'm going to try to do this collector stuff, and you realize you paid way over, and then you try to sell it and you get burned.
Yeah.
Don't want to hear that story. But so focus on the bullion side. What I would recommend you do too, first of all, is to stick with some of the most popular coins, and bars. So on the gold side, you have the gold American Eagle is one of the popular ones. The gold Canadian Maple Leaf is also a popular one. The 1 ounce gold bars, such as the PAMP Swiss bar, the Credit Swiss bar, those are extremely popular. And the gold Krugerrand is also another widely traded coin. So I would stick with something like that on the gold side. You really can't go wrong with that. Those generally trade for a small premium over the gold price. And then moving on to the silver side, I would stick with, normally I would say silver eagles. Unfortunately, I'm not attracted to silver eagles right now just because of the high premiums. So I would say, look at your Canadian Maple Leafs, your silver Canadian Maple Leafs. Maybe look at your 10 ounce silver bars, your 100 ounce silver bars, just some of the stuff that is a little lower premium. So, stick with bullion, stick with the well-known coins. And the last thing I would say is look at the spread. And by spread, I mean like what you buy it for versus what you could sell it for. And any dealer would gladly tell you, and you could call up AppMex if you have questions, if you're new. We have a sales and customer service team. You could ask to say, hey, if I bought a gold eagle today, what are you charging? And let's say I sold it back to you during the same day, what would you pay? And then obviously any dealer is going to have a markup. We might say, hey, we'll pay you, or you could buy the coin for $100 over the gold price, and that's the small premium. And then we'll buy it back from you at $40 over the gold price. So you could say, okay, that has a $60 spread. Okay, what is it on the maple? What is it on the gold bar? You want to basically make sure that you're getting a good spread. I think another thing that a lot of times beginners get into is they look into some weird products. Maybe they said, hey, I'm going to buy a lot of 20 Swiss francs, which is a decent coin, but definitely not as popular as a gold eagle or a gold maple leaf. They get into a lot of this stuff and they said, I got it for basically the price of gold. So they said, I got an amazing deal. And then they try to sell it. And the dealer is like, well, I'll pay you like 90% of the gold price, or I'll pay you 95% of the gold price. And by the time they try to sell it, you would have been better off just buying an eagle or buying a maple leaf.
Well, I guess that boils down to, why are you buying it and why are you selling it? At the end of the day, if you're looking at this as a long-term hold, ultimately you're hoping that you don't have to sell it. And if you do, by that time, gold and or silver have gone up in price and you're ahead of the game anyways. That's how I kind of look at it. But one of the things that I often hear from people who don't invest in gold or silver, it's like, yeah, I don't get it. Like, why would I buy, what am I going to do? Go to the store and buy milk with a gold coin? So explain from your perspective. I have my, how I explain it, but you're the expert here. How do you explain to somebody that, no, it's not quite the way it works, or it's not the way it works at all, actually, but how would you explain it in that case, Patrick?
Yeah, so I would say getting back to our topic about gold being money. So if let's say I gave you a €100 note today and you said, okay, you're in Canada, you try to spend it, and someone's going to look at you, we don't accept euros here. And they're going to send you off your way. Doesn't mean the euros are worthless. Doesn't mean you need to throw it away or do whatever. It doesn't, you can't use it at that given time. Same thing with me. I'm in the US. I can't spend euros. If you gave me Canadian dollars, guess what? Can't spend it here either. So I look at it too, like it's, like we said, it's money without a country. It was actually years ago. I was in Brussels, and I was there with my wife, and we were just in the main square area, and I needed more euros. So like I always like bringing cash every time I go on vacation. So I got a couple $100 bills, gave it to the currency exchange thing, and I was looking at the currency exchange board, and at the bottom, obviously they had your Canadian dollars, your US dollars, your British pounds, and so on. It said Krugerrand, gold maple, gold eagle. And it had a price over there. So it's actually kind of interesting. So it's like, yeah, you can't spend your gold, you can't eat your gold, but it doesn't mean it's worthless.
Well, I think what you said is really relevant, which is it's acceptable as currency in any country in the world. I don't know, there probably is, but I don't know of anybody that if you had a gold coin, that they wouldn't convert it into that country's currency. And that's really what you're doing at any given time. If you've got to get liquid, you're actually walking into whatever dealer or bank or selling it on the street, whatever it is, but you're selling it for the currency of the country that you're happen to be in.
That's correct. And there's actually a story. I don't know exactly how it goes, but I know that there was one point in time where they would actually have gold coins and they would sew them into like the uniforms of military, especially if they were going overseas, because gold has that value. Any country in the world, whether you're in Asia, you're in the Middle East, you're in North America, you're in Australia, people know what gold is. And it has a value, and you could easily get out of it. You don't want to have like a certain currency, and maybe that currency, let's say you have US dollars and you happen to be in the Middle East and certain countries don't like the US over there. It's like probably not the best currency to have. Whereas gold it's neutral.
So tell me if you know the answer to this. I'm curious because I don't know the answer. Is if I'm traveling to US, let's say I'm coming from Canada into the US, I'm supposed to be claiming anything over 10 grand. I'm supposed to let them know, hey, by the way, I've got more than 10 grand. Do they hold gold, or do they look at gold as a currency? Or am I just walking in? If I walk in with 10 gold coins, what are they saying? You got to claim that? I don't know the rules around it.
I think a lot of that's going to depend on your customs agent. Like, I guess I've heard stories where people say, oh, it's valued off its face value. I've also heard stories that someone says, hey, I'm carrying 6 gold eagles and they happen to be worth north of $10,000. Yeah. And even though the gold eagles have a $50 face value on it, obviously the commodity value is worth well north of $10,000, that they get pooled in the side. I have not had a ton of experience traveling internationally with gold coins, but I could say when I did move from California to Oklahoma City, I did move a portion of my physical metals through the airport. And it's actually funny, if you ever x-ray gold coins or silver coins, they're so dense that it just appears as a big black blob on the x-ray machine. So a lot of times they pull you in the side, they're like, what is that?
Well, I've had that experience, by the way. It was interesting, and I was just traveling domestically, and my brother-in-law had given me a couple of tubes of silver coins, and I came through customs, or not through customs, through security, and he looked at me, and he actually said to me, he goes, are those silver coins? I go, well, I wish they were gold, but they are silver. He goes, yeah, that's what it shows up in the x-ray. And only because he knew what it was, because to your point, they just show up as big black blobs. And, he made me pull it out and just to show him, but it wasn't an issue. But that's how they show up in the x-ray machine.
Yeah, and I have traveled with well north of $10,000 domestically. Never an issue. Obviously, the TSA person might just say, "Okay, well, that's gold or silver." One time, I got pulled on the side. I had gold maple leafs. I actually like maple leafs because they are 4 nines pure, because they're more pure than the eagle. So I personally like maple leafs. But the guy was like, "Oh yeah, I have some Krugerrands," and it's kind of neat.
Well, there's an interesting part of gold. We'll use the gold story, and I'm sure you've heard this, given you're in the industry. But it's an interesting story that was shared with me a long time ago around gold. And back in, let's say, the 20s and the 30s, gold would buy you a suit, a meal, and a hotel room, and one gold coin, and then you put that gold coin away and come ahead, 50 years or 100 years, whatever that might be. And ultimately, a gold coin today continues to buy you a suit, a meal, and a hotel room. And it's interesting when you look at it that way. And the whole story was wrapped around, my grandfather took, a gold coin and put it in a box and said, I'm going to save this for my great grandchildren. And he also took a $20 bill, which was just an astronomical amount of money back at that time. And he goes, I'm going to suck it up. I'm going to put 20 bucks in there too. Come ahead 50, 75 years and you open the box and that gold coin will buy, like I say, the suit, it'll buy the hotel room, and it'll buy a meal, and the 20 bucks will buy a coffee at Starbucks. And that was a real great illustration of, what the precious metal parts of an investment portfolio may represent. And I thought it was just a great story that I've shared a few times. Have you ever heard that story before, by the way? It seems to be.
Yeah, I actually have too. And that's another thing too that I think is nice about precious metals too, because I personally hold it. A lot of it I don't plan on selling. I hope to give it to my kid sometime. If I look at it, I mean, my kid's 4, so like obviously he still has a long time. But when I give it to him too, I'm hoping that it has value. And another thing too with gold too is, since it's tangible, it's private. No one needs to know. The government doesn't need to know that you're giving it to your kid. There is no inheritance tax. You just pass it along and say, "Here you go." So it's a nice feature.
So go back and tell me a little bit about, you talked about you were interested in precious metals. You got on the journey you got on. Where did your interest in precious metals what brought it up for you? Like, why did you actually start looking at precious metals as a part of your investment portfolio, and the interest that, ultimately drew you into this line of work?
Yeah, so just going back to that 2008 time, I was just looking. I was like, well, what performed? I was looking, stocks were down. I believe bonds were down. It's just everyone's portfolio got chopped in half. And then I started talking to a whole bunch of different friends. It's like, well, what do you do? Obviously, you had the real estate crisis around then too. I said there has to be something that did well. And then I found gold. I found just started looking into economics, started looking into Austrian economics, and how the government just manipulates the money system, and it got me digging down this massive rabbit hole of how basically money works. And then it got me to explore this. And I personally like hard assets now, just because I'm skeptical long term whether the US dollar is going to hold its value in 10, 20, 30 years. I mean, time will tell.
Well, I think, as we sit here today, there's a lot of stuff, a lot of central bank challenges right around the world. And, there is certainly a lot of uncertainty with what's going to happen with fiat currency overall. Will we actually go to a CBDC, and what will that mean? And, central bank digital currencies. Yep. I mean, that's a conversation that's being had a lot. And how do we hedge even or protect ourselves should we go that direction? Nobody has any idea, by the way. And it's all speculation as to, I don't think it's speculation as to will they roll it out. I think that's a done deal. It's just now a case of time and what it's going to look like. Then it's a case of, what do I do in the meantime, and how do we work around the system? Because ultimately, as entrepreneurs, we're always trying to work outside the system a little bit. I mean, the last thing we need is more government control, from my point of view, yet that seems to be the direction we're going. Are you familiar with CBDCs? Have you done any research around it at all, Patrick?
I have not, but I did hear that I believe it's in China where they're trying to roll it out, and you almost have these like social credit scores too. So like if you're a good citizen, then you could do certain things, and if let's say you've defaulted on a debt and they said, okay, well this guy's no good, then you get blocked from certain things. It's kind of a scary world to think that the government could have that much control.
So in China, by the way, they're not trying to, they have. It's just a case of, of course, when you're talking about China and how big it is literally multi-millions of people in many, many cities. And I have contacts there and expats that live there. The point is that you don't do anything over there anymore without your phone. They know exactly what you're doing. If you walk into a building, you're often having to flash your phone so they read that Q code, and they are ultimately doing facial recognition even at the airports. And so that's happening right now in social credit scores. We've had friends, we were in China, geez, when was that? 3 years ago, I guess. And a friend of ours who was living there said, well, I'll meet you in Shanghai. We said, great. So she had to jump on the train, and it's like a 4-hour train ride, but she's going to come. She really wants to see us. And she goes to buy a business class ticket, and they wouldn't sell her one. It was blanked out. So in other words, it was grayed out. The button says business class was grayed out. And she's going, oh, I wonder if it's oversold. Guess what? It was a social credit thing for her because of a dispute that she had had with the bank. And I went, oh, and she was like, what the hell, right? But that's what they were doing. And that was 3 years ago. And so they've come a long way since then even. So it's an interesting time for sure.
Yeah, it's scary with a lot of this government control, and who knows if a lot of these records are accurate too. Like I mentioned earlier in this call too, we talked about the bullion card and the precious metals rewards credit card. I personally haven't applied for a credit card in north of 15 years, but I got one. One of my coworkers got one too, and with the bank's process, some customers are what they call auto approved, and some go through manual review, which is basically an underwriting team has to look at your credit, look at all this stuff. And one of my coworkers got flagged for manual review because they said he had a dispute 3 years ago where he did a chargeback, and he's like, I don't even know what that was for. and like, I mean, it's scary when you think about it. Like, let's say you went to a merchant and they charge you twice. You charge $50 on Target, and they're like, oh, your credit card didn't go through, so could you stick it in again? You stick it again, and before you know it, you got two $50 charges. And you said, well, I only bought one $50 purchase. I didn't buy two. So you dispute it, and it was a perfectly legitimate dispute because you got charged twice. But then that somehow flags you in the system and messes up your social credit score. I mean, that's scary to me.
Yeah, well, hey, listen, let's face it. When we look at governments around the world, it's not like they have a track record of huge success. And of course, when we even consider what's been going on the past few years, it's anything but that. So as we kind of wind down here, Patrick, what is the guidance, or what is some additional thoughts around precious metals, around AppMex or One Gold or whatever it might be that you would want to share with listeners today in terms of insights, or how about some profound wisdom? Have you got any kind of hiding in the corners of your mind there?
Yeah, I would say definitely consider an allocation to precious metals. I think a lot of things are cyclical. Nothing goes up forever. Nothing goes down forever. I know we talked about the 60s and 70s, but let's fast forward. Let's look at modern times too. So let's look at 2000s and more recently. So 2000 to 2011, you had what we call a lost decade in stocks. I'm sure you could probably Google that. There's probably news about that, where basically stocks didn't do anything. Gold, on the other hand, during that time actually went up from $250 to $1,900 in 2011. So it basically had a 7x move. And then you fast forward today, so 2011 to 2022, the S&P rallied. I mean, everyone has seen that. It went from 1250 to about 4,800. It's certainly lower now today with the correction. But I think a lot of times too, like, things are cyclical. I think it's about time where that gold, your gold assets are going to shine. Maybe stocks struggle in the next couple of years and gold performs well. So I would say definitely consider an allocation to precious metals. If you want to buy physical, I would recommend you check out appmex.com. That's apmex.com. And if you're okay with a vaulted solution, check out onegold.com. That's onegold.com. As a special offer for listeners, I do have a coupon code for 50% off the premiums for US gold and US silver on One Gold. So that's gold 50 off. So GOLD 50 OFF for that 50% off US gold premiums, and silver 50 off is a silver equivalent promo.
Wow, brilliant. Love it. Now, when I look at, the allocation of precious metals, or at least looking into it, I think that when I hear, and to the degree that you can trust information that as it flows, because these days that's probably the biggest challenge. But when we see what's happening, Russia, Ukraine, China, Taiwan, UK, Europe, all of these things that are happening overall, and even the US, not Canada, however, but that's a different conversation, loading up, literally central banks are loading up on gold. Do you have any kind of confirmation of those facts, or are those facts, or is that all you don't know? It's kind of speculation. But it seems to me that consistently the messages, particularly Russia, China, have really loaded up, as well as the US, to the degree that they have. What's your insider kind of view of that?
Yeah, so China and Russia definitely have been loading up, and the US has had one of the largest stockpiles of gold too. I think one thing to consider too is, sometimes people say gold doesn't have value, and getting back to our topic too, you can't spend it, you can't eat it, whatever.
Yeah.
It makes you question, why does the US, as one of the most powerful countries in the world, hold gold?
Mm-hmm.
And I think if you don't own gold, maybe you need to consider that. Like, why wouldn't it just liquidate it? Like, if it has no use.
Well, I think
But
that's it. Yeah, and I mean, why would even Russia and or China load up like they are? I mean, at the end of the day, we look at the shift of that view. By the way, of what China and Russia have been doing over the past several years, and that becomes that whole kind of, I'll call it a separation. That now sovereignty, if you will, that they're going, and they're kind of pushing the West out of the way. We don't know what's going on in behind the scenes politically, of course. These are all political moves, I think, that are happening, but they're going to have long-term effects. So I look at it that, there's the old phrase, follow the money. And, if the money's going to precious metals, if it's going to gold, if it's going to silver, probably it wouldn't hurt to follow the money a little bit and kind of follow their lead, if you will. That's how I look at it.
Yep, agreed.
Patrick, I appreciate your time, your energy, the insights that you've shared here today. Lots of great takeaways. I love the topic, by the way. And when I look at, my own allocation of, precious metals, it's a part of my portfolio of real estate and some crypto in terms of Bitcoin specifically for me. But ultimately, that's the diversification that I look at, is cash flowing real estate, having some, what I would refer to as insurance in terms of precious metals. And then, like I say, some Bitcoin along the way, because I'm still a big believer in blockchain specifically, but also in Bitcoin as a future currency, if you will. But you really gave some great insights into why precious metals. And I mean, you represent a huge dealer in all of this. And I don't, would I call you a dealer, by the way? Is that the wrong term? It sounds wrong.
No, that's correct. It's a precious metal retailer or dealer.
Okay, great. So I appreciate what you bring to the table, the expertise, the credibility. And, for those who are listening, take advantage. I'll post it on YouTube. I'll post the link, but ultimately take advantage and see what you can do. Look into doing some precious metals. Go to AppMex, go to One Gold, take advantage of the offer that Patrick's put on the table. Patrick, thank you so much for your time and energy, buddy.
Great. Thanks for having me on.
Ladies and gentlemen, thank you for listening. If you found value in the podcast, please take the time to rate and review and share with others. Share with your friends. As it is my goal to always improve and to provide the highest value for you, the listener. If you have any comments, suggestions, or questions you'd like answered, please email me at ceo@reincanada.com. That's ceo@reincanada.com. I look forward to hearing from you. And until next time, Patrick out.